Welcome to the Deep Dive, where we try to pull out the key signals from all the corporate noise.
And today, we're diving into Coda Octopus Group, ticker CODE, their Q3 fiscal year 2025 earnings call just wrapped up.
Right, and they're a really fascinating company, aren't they? Big in subsea technology defense systems.
Absolutely. And this call, well, it had some pretty significant updates, especially on their defense programs and some new tech.
But here's the thing, the market reaction was pretty negative.
Yeah, that's the puzzle. Stock finished down about 7%, despite what looked like, solid results on the surface.
Exactly. So that's the disconnect we want to explore for you. Why did the good numbers get overshadowed? Was it something else?
Let's start with those headline numbers that, well, frankly surprised the street a bit.
Okay, top line.
Total revenue for Q3 hit $7.1 million. The consensus was looking for, $6.16 million? So a really comfortable beat.
That's a big beat. Represents almost 29% growth year over year. Pretty strong.
Very strong. And it wasn't just revenue.
Bottom line, too.
Yes. Yep. GAAP EPS came in at $0.11 per share. The estimate was $0.10. So, not a huge beat, but still beat expectations.
Okay, so clean beats on both revenue and earnings, which makes that 7% drop even more curious.
Right. It immediately tells you the market wasn't looking at the history. They were looking forward, or maybe looking deeper into the details.
So what were they seeing? What spooked them?
It really seems to boil down to one key thing: margin compression.
Okay. Let's dig into the detailed financials then. That's usually where the story unfolds.
Exactly. Consolidated gross margin, and decreased pretty noticeably, came in at 68.3%.
And what was it before?
It was 73.9% in the same quarter last year.
Oof. Yeah, that's a drop of over 5 percentage points.
Yeah.
That'll get attention. Did they explain why?
They did. Two main factors. First, the changing business mix. Remember, they acquired that Acoustics Sensors Materials unit back in October 2024.
Right, the ASM acquisition.
Well, that unit contributed revenue, which is good, but apparently it operates at a lower gross margin profile than their core business, so that pulls the average down.
Okay, that makes sense structurally. What was the second factor?
This one is maybe more concerning in the near term. Significant underutilization of their high-margin rental assets.
The rental gear. What caused that?
It seems directly tied to the slowdown in funding for U.S. offshore wind projects.
The renewables pullback. We've heard about that impacting other suppliers too.
Yeah, major clients basically hit the brakes or delayed big projects, meaning less demand for Kodai's rental equipment, which usually carries really good margins.
So it's like the double whammy, bringing in lower margin revenue from the acquisition while simultaneously losing some high margin rental business.
Exactly. It hits profitability pretty directly when that expensive gear is just sitting there.
Okay, so margin pressure is clear. What about overall profitability, operating income?
Operating income was $1.38 million. That gives an operating margin of 19.5%.
How does that compare?
It's actually a slight decrease year over year, but you have to remember operating expenses were up, mainly because of that ASM acquisition.
Right. So considering that, maybe holding the line around 20% operating margin isn't too bad. Shows some discipline.
I think so. And their balance sheet provides a lot of cushion. They ended the quarter with $26.2 million in cash and equivalents.
Any debt?
Zero debt. And they actually increased their cash position by $3.7 million since the start of the fiscal year.
Okay, so financially very solid, very flexible. That's a definite positive.
Definitely. Gives them options, maybe for more acquisitions or just weathering any bumps.
Let's look at the segments then. Where did the revenue actually come from in Q3?
Okay, so the core marine technology business, this is their sonar, their hardware sales, that part was booming.
How much?
$4.7 million in revenue, up over 30% year over year. And get this, hardware sales within that segment were up over 103%.
Wow, okay. So demand for their core tech is clearly very strong.
Absolutely. But then there's the other side of the coin, marine engineering.
What happened there?
Revenue decreased pretty sharply, down 33.2%.
A third of the revenue gone.
Why? Management pointed directly at delays in defense contract awards, said it was tied to the timing of, federal budget appropriations, government funding delays.
Okay, that's a significant drop. And it does feed that market narrative, right?
Yeah.
If defense awards are getting delayed, maybe future growth isn't as certain.
It's a valid concern, definitely. Being a defense contractor means you deal with that cycle. The deals are big when they land, but the timing, it's unpredictable. That volatility scares investors.
Yeah, short-term pain versus potential long-term gain.
Precisely. But that brings us to the really interesting part, the defense story itself. Because despite the timing issues in engineering, the progress on their key systems was actually huge this quarter.
Okay, let's pivot there. This is about the DAVD system, right? The Diver Augmented Vision Display.
Yes, and their Echoscope sonar tech. For the DAVD, two massive milestones were hit. First, they finished the dust hardening program.
Sounds technical. Why is that important?
It's crucial. It basically proves the system is tough enough, rugged enough, for real-world military operations. It's not just a lab prototype anymore.
Got it. A validation step. And what did that enable?
It directly led to the delivery of 16 DAVD untethered systems. These are being integrated right now with the U.S. Navy's Mk-16 UBA.
UBA.
Underwater breathing apparatus, the kind used by Special Forces divers.
So Cody's tech is potentially becoming standard gear for Navy Special Ops.
That's the implication. It's being evaluated right now as part of their core diving equipment. That's a huge step towards becoming a program of record.
And are other countries interested?
Looks like it. They also announced an initial order, just 2 units to start, but from a major influential European navy.
Okay, so potential international adoption starting too. That helps de-risk reliance on just the U.S. Navy.
Exactly. It shows broader appeal and export potential. And management backed this up with guidance.
What are they expecting for DAVD sales this year?
They confirmed their target for fiscal 25 is between $3.5 million and $4.0 million.
And how does that compare to last year?
Huge jump. It was only $1.2 million in fiscal 24. So they're clearly expecting this transition from R&D wins to actual significant revenue.
Okay, that's DAVD. What about the other tech, the Echoscope? Any news there?
Big news. They launched the Echoscope Pipe E Nano Gen series.
Nano GN. What's special about it?
Miniaturization. It's an ultra-small, real-time 3D sonar. Management described it as like a shade bigger than a smartphone.
Wow, that's small. What's the application for something like that?
Think small underwater drones, UUVs, robotics, even diver wearable systems.
And that UVV market is supposed to be enormous, right?
It's absolutely exploding. Forecasts suggest it could go from around $4.8 billion this year to over $11 billion by 2030.
So this Nano GN is positioned right for that wave.
Perfectly. Its small size is the key advantage. It lets Cody target that massive growth in small, autonomous underwater systems.
Are they already integrating it?
Yes. And this is where it gets really synergistic. The Nano GN is already being integrated with the DAVD system.
Connecting the two key technologies.
Exactly. Specifically into the U.S. Navy's Advanced Descend Lightweight Atmospheric Dive Suit System. So you see the convergence, their display tech, and their miniature sonar tech working together in next-gen Navy hardware.
That's compelling, selling a whole integrated system, not just parts.
That's the goal. Higher value, stickier contracts. Oh, and one other point from the Q&A worth mentioning.
Sure.
Supply chain. Management made it clear they have minimal exposure to China for critical components.
That's important, especially for defense work these days. De-risks things geopolitically.
Big time. Removes a potential headache down the line.
Okay, so let's try and tie this all together. We have solid headline beats on revenue and EPS.
Yep.
But significant gross margin compression due to the ASM acquisition mix. And importantly, that slowdown in offshore wind rentals hitting high margin business.
Correct. Plus, a sharp drop in the marine engineering segment because of delayed defense contract awards.
Okay, so those are the negatives, the things that likely spooked the market and caused the sell-off.
That seems to be the short-term story the market focused on.
But on the positive side, the core marine technology hardware sales are booming.
Up over 1%.
The balance sheet is pristine, lots of cash, no debt.
Rock solid.
And, crucially, major tangible progress on the defense front. The DAVD system passed hardening, 16 units delivered to the Navy for integration, first European order secured, and strong revenue guidance for the year.
And the launch of the Nano GN sonar, perfectly timed for the UUV boom, and already being integrated with DAVD for the Navy.
So it really is a case of near-term headwinds versus long-term, potentially massive strategic wins.
That's exactly how it looks. The market reacted to the immediate margin pressure and the engineering segment dip, maybe overlooking the significance of those defense milestones.
Management seemed to think the defense pipeline, while lumpy, is the key. They use the phrase It's a process, not an event, right?
Yeah, basically saying be patient. These things take time, but they are happening. Investors aren't always patient, though.
So what's the path forward? How do they get margins back up?
Management believes oil and gas activity might pick up and offset some of that renewables rental weakness eventually. But the main driver for margin improvement is expected to be selling more of these higher value integrated systems, like DVD and Nano GNN combined.
Right, shifting the mix back towards higher value tech.
Right.
Makes sense. The catalysts are definitely there. European DVD adoption, Nano GNN getting traction, hitting that $3.54 million DAVD target this year.
The roadmap looks strong for the next couple of years, even if this quarter had some, financial static.
Okay, which brings us to the really actionable part. Given this disconnect, the market punishing the stock despite defense progress, how might an investor think about this?
This is where it gets interesting. If you believe the market overreacted to temporary issues,
Then there might be an opportunity. Okay, let's shift into our This Is Not Financial Advices segment. What's the outrageous but plausible trade idea based on this call?
All right, so the premise is the market is wrongly fixated on the short-term margin noise and the engineering delay. The real value, the multi-year value, lies in those confirmed Navy deliveries for DAVD and the Nano GN launch, validating their position in the huge UUV market.
Okay, so how do you structure a trade around that view?
You could consider a two-pronged approach. First, sell some short-term put options, maybe out 90 days or so, with a strike price near where the stock is currently trading.
What does selling puts achieve here?
You collect premium upfront. The bet is that the stock won't fall much further from here, that the bad news regarding margins is mostly priced in. It's like getting paid to wait for the dust to settle, betting on near-term stability.
Okay, so that covers the downside or the near-term stabilization. What about capturing the potential upside from the defense story?
That's the second part. Combine selling those puts with buying long-dated, deep-in-the-money call options, say options expiring in 12 to 24 months.
Why deepen the money and long-dated?
Deep-in-the-money calls behave more like owning the stock, capturing more of the upward movement, but with less capital up front than buying shares directly. Long-dated gives the defense story time to play out time for that $3.54 million in DAVD revenue this year to translate into larger recurring program wins, leveraging that whole UUV market trend.
So the overall idea is bet on stability in the short term by selling puts and bet big on the long-term defense growth with the call options, capitalizing on what might be market impatience right now.
Exactly. It's a way to potentially profit if the stock stabilizes now and then takes off later as the defense wins become more undeniable and hit the financials more consistently.
Okay, an interesting structure. So wrapping this up, the key takeaway seems to be Codier's Q3 showed strong headline numbers, but they got overshadowed by real margin concerns stemming from temporary factors.
Right. But at the same time, they made undeniable concrete progress on their core mission-critical defense technologies, DAVD, and the new Nano GN sonar. Big steps forward strategically.
It really highlights the need for critical thinking, doesn't it? You have to look past the immediate financial noise sometimes and focus on the underlying strategic execution.
Absolutely. Are they hitting the milestones that matter for the long term? In this case, on the defense side, it seems like they are. The market just penalized them for the bumpy transition this quarter.
Which leaves us with that final provocative thought for you, the listener. Considering how the stock reacted, do you think the market is correctly pricing in the risk of those defense budget delays we saw in the marine engineering segment?
Or is it significantly underappreciating the confirmed success of the DAVD program, those Navy deliveries, and the massive multi-billion-dollar growth potential in the UUV market that the Nano GN is built for?
Something to think about. Where does the real weight lie, the short-term wobble or the long-term trajectory?
We'll let you ponder that one.
Thanks for joining us for this deep dive. We look forward to exploring the next set of signals with you soon.